right, I guess we can start. Let's start at 6 o'clock, 6:05. Okay. Right, guys. So what a good week. That's going to be plenty of volatility in the markets this week. Right. I'm gonna do a rundown. I'm gonna do a rundown into the economic calendar for now, and just go through my personal opinions on what I think will happen and what just happened yesterday and today as well. Right, so I'm going to be using investing.com calendar today just to be quick and easy. We just had these. Okay, cool. Right, so yesterday we had Sunday we had retail sales tax. No, not Sunday. This is not on my time. There we go. So we had retail sales on Monday. It came higher than expected for Australia, right? What does that mean? Is basically retail sales is, the retail sales is basically how much have been sold in the month. So basically September last month into the retail industry. So, all the things that people may buy, consumers may buy, like t-shirts, pants, whatever you think of buying, like new shoes, new phones, or new MacBook, new iPhone, whatever, right? So it came higher than expected. When we think about central banks, right, what the central bank is trying to do is trying to raise the rates to make the products it's raising the rates to basically stop people of spending into the economy, right? What is happening here is that we can see that it's not actually happening. There are a few factors related to that I will touch. Is the audio on? Everyone can hear me? I think so, right? Is it all good? Okay. Right. Yes, okay. Yeah. Check on your side. Check on your side, mate. What's your name? Yonis. Oh yeah, you have to switch on. Yeah, maybe now it's working. Okay, so let's go where we're going from. So I was saying, right, the retail sales, when the central bank, the RBA, the Reserve Bank of Australia, raised the rates, it's basically trying to stop people consuming and keep the money on the bank account, so then inflation doesn't get higher and higher. But it's not basically what is happening here in Australia. There are a few aspects that why this is not happening. We are getting closer to Christmas. We are getting closer to end of the year. So this is my personal thinking. People may be already starting to spend all the bonuses and everything they've achieved from the first half of the year, and now they're spending on buying new products. We had new releases on new tech releases like iPhone 15 and a few other things. So that makes me think like, okay, if retail sales are going up and this is the number one causing of inflation right now, then we may have high inflation for longer. So inflation may be higher in Australia for longer. Will that, make the Australian dollar stronger? I don't think so. Even right now, as the market is looking, this go basically all against the economics concept that right now, because with high inflation, we have a stronger currency. But remember, with higher inflation, the need of the central bank to raise the rates, it's much more needed than we have low inflation, of course. But then when the central bank is hitting the dot plot, what I mean by the dot plot is hitting the peak of the rates, This means that they will have to pause for longer, and then afterwards they have to cut the rates to bring it back on the, where it were before. So that makes me think, okay, we may have a high inflation, but then we may have one more hike. But risks are that we have one last hike from RBA and then stop for there until 2024, and then where we're going to starting to cut the rates. This is not only me saying this. Wells Fargo, Bank of America, JP Morgan, and a few others like MUFG and Westpac, they are saying this as well. Right, I'm going to go through the researches. I have two researches I want to go through with you guys later. But this is pretty much it, right? We've seen yesterday from Australia, the retail sales came much higher than expected, 0.6% higher than expected. So this is a huge upward move. Just after that, we had the German GDP, right, at 8 o'clock in Sydney time yesterday. That's all yesterday, guys. So we had a negative, still negative growth, way, like it looks good because it's in green here. But if we look, the previous was at a 0.1% growth, right? So that was still positive. The forecast was at a negative 0.3%, but it came in 0.1%. 0.1% negative, right? So that means that, yes, it came as a bit better than expected, but it's still negative. So it's still a bad growth for Europe, for German, right? And then this, makes me think about other things that we're going to talk soon. So that was pretty much it from yesterday, retail sales from Australian and German GDP. And then we had this Tuesday, I was sleeping already this time, midnight, German CPI, right? We had the German CPI year over year, and then we have the month over month. All of them came much lower than expected. So we had a forecast of 4%, and it came 3.8, 0.2% lower than expected, the year over year. But I want to bring attention to the month over month. That was like quite a surprise for me when I woke up and took my phone to have a look on that. So the previous was 0.3%. The forecast was 0.2, so 0.1 negative, lower than previous. But then it came 0%. So like what, they didn't have any inflation. Like what is happening? Like how is that possible? No inflation on this scenario. I'm like, oh, okay, but all right, exactly. Concerning Euro, Germany, penny better, yet definitely it's negative. So why the up move in some Euro pairs with all the negative data and yet Euro is going up? I'm gonna get this answer for you soon, mate. I'm just gonna run down this one. But yeah, there is a reason why is this happening. But anyway, so here lower than expected. So this we take as negative as well. Lower inflation for German. That's good for them. Now, we had a few things today. We had the manufacturing PMI for China. It came lower than expected, okay? And the non-manufacturing PMI as well came lower than expected. So this is not good for China as well for Europe, okay? Very big correlation there. Now, this was the big take for the day. Of course, what a big news. They wouldn't change the rates. They won't change the rates. I don't know why people keep insisting like, oh, they will change the rates. No, they will change the rates on the next one. No, they won't. Like, come on. This will be the best carrying trade you can have on the market right now. Long in USD JPY, in my personal opinion, would be the best carrying trade we may have in the market for the next months, because what just happened today shows to me how badly and how nonsense the Bank of Japan is doing the things over there, how dumb they are on the economy, right? I don't want to be the better, I don't want to be the best one here, but even a child with 5 years old would be better than Kuroda right now. Anyways, anyway, so JPY, very, very weak. Let's just have a look on USD JPY. Look at that, right? Look at this. I mean, 150, we're gonna intervene. Well, do it then. Like, okay, no problem. Good pullbacks to buy. I'm not taking those personal trades because I just don't want to have exposure on Japanese yen right now, but I want to have a few more how can I say that, confluence for me to get involved again, as I was on long positions, but then I've closed as we approached the 150. They did intervene once, okay, they did intervene twice, and now what, we've closed above 150 again, right? So BofA and JP Morgan, they're expecting the USD JPY to go to 150, right? 150, 155, sorry, 155, right? So if we actually have this target reach, that will be a 5,000 points, 500 pips trade, from us. Tricky JPY, as long as the bot keeps selling bonds, is doing silly interventions. Yes, man, I agree. I'm personally staying away from Japanese yen. Yeah, same, mate. I'm just, staying away from Japanese yen. I think that's the best thing we can do on this scenario right now. Anyways, I'm gonna get on this later. I have the statement of monetary policy here. I wanna have a read with you guys later. Where we are here. Now, I want to bring attention for today big data that will be from Europe, right? We have the core CPI and we have the GDP. Does anyone have a take on those things? Because I do have a take, and I can sort of explain why I think this will come as it will come. Let me give a sip on my juice here. Those juices are really good, man. Anyways, so my personal take, yeah, so it will come negative, right? But that's the thing. So the core CPI, right? If you guys know, the core CPI excludes the energy, alcohol, the food, and tobacco prices. Okay, so the CPI is something that doesn't exclude these, and the core CPI excludes these. The core CPI, I think it will come lower than expected. Why? Because it's not, it will come as, it will come lower than expected because excluding the energy prices. Okay, now the CPI, I think it will come as expected or a bit higher than expected, right? Why is that? Why I'm thinking about that? Because if we look at the energy prices, right? Let's have a look on energy prices from Europe. We had this rise on October, right? So since the war on Israel and Gaza have strike, we had a 47.31% up move. Well, that was not the max, right? Because the max was 57.89. So let's call it 58% up move on energy prices. Okay, so this is a big move. We were sort of normalizing like the prices, and then Israel, Hamas strikes Israel, and then all the war and then conflict begins. And then we have a surge on oil prices, we have a surge on gas prices, and this will lead inflation higher, right? This will lead inflation higher. So I guess the CPI will come a bit higher or as expected, okay? So we may see this as expected or a little bit higher. Now, the core CPI, I guess it will come lower. As Lagarde already mentioned, I'm not spending money yet, CPI, because of its code, and they spend only energy. Yeah, that's exactly what I think. So what I guess, what I'm thinking about is, even Lagarde have mentioned that, right? Let me grab it very quick. Lagarde. ECB press conference. I was listening to some soldier. 4 days. Was this one? No. No. Where's the central bank? European Central Bank. Videos. Was this one? No, it wasn't this one. 10 days. Where is it? Can't find it. Not good, not good. All right, anyways, if I can't find it, if Lucas, can you find it for me and send the link? Yeah, yes, she is very, very naughty right now. She's like, yeah, as we can see, economy is doing quite resilient. So of course it's not. Anyway, so I couldn't find the link for the ECB press conference from the last week. So when they pause rates, you know, she came to the media. I just want to show you guys that, but I couldn't find. Let me try it again. Sorry, guys. ECB press conference live. In her pocket. That's a good one. Oh gosh. Yeah, I won't be able to find it. Oh, is it this one? Oh, this one. I wanna show this one. Let me stop share and share again, because then I can share with the audio. Share sound screen. Okay, let's go. Let's listen to this one for a quick one here.
The economy remains weak. Recent information suggests that manufacturing output has continued to fall.
No way. Really? Oh, thank you to tell me that.
Subdued foreign demand and tighter financing conditions are increasingly weighing on investment and consumer spending.
So that's something she mentioned, right? Let me do it again here. Tighter financial conditions
are increasingly weighing on investment and consumer
spending. So basically is that the higher rates are actually affecting the investments and the consumption on the economy. That means that less people are spending, less people are investing, will come to a lower inflation.
The services sector is also weakening further. This is mainly because weaker industrial activity is spilling over to other sectors, the impetus from reopening effects is fading, and the impact of higher interest rates is broadening. The economy is likely to remain weak for the remainder of this year.
Okay, that's something I want to mention as well. She did mention that the economy, pay attention.
The economy is likely to remain weak for the remainder of this year.
So the economy is likely to remain weak for the remainder of this year. So that shows us that even her, it's telling us that, mate, euro is short. I'm joking. She's mentioned like, okay, guys, so we are actually stepping into a very bad territory right now where we are going to have GDP lower, right? In other terms. So likely to remain weak for the remainder of this year. And what do we get? What do we have today? We have GDP, right? And even she said there's another part. I don't want to, you know, not that I'm wasting, but I don't want to. Let me see.
Been supported by the strength of the labor market. The unemployment rate stood at a historical low of 6.4%. In new jobs are being created, could be lower if effects of money tilted to the downside, gradually feeding.
Okay, that's the part I want as well.
Through to employment. The risks to economic growth remain tilted to the downside.
What is she saying here again is that the growth of the economy is tilted to the downside. All right, so it's still very bad. She haven't mentioned anything good yet. Well, apart from the employment.
Growth could be lower if effects of monetary policy turn out stronger than expected. A weaker world economy would also weigh on growth. Russia's unjustified war against Ukraine and the tragic conflict triggered by the terrorist attacks on Israel are key sources of geopolitical risk. This may result in firms and households becoming less confident and more uncertain about the future and dampen growth further.
So that's all, okay? That's all. Okay, the link have expired. Let me do it again. Done. Anyways, so, you know, just pay attention on those news today. I think this will fulfill our movement even lower for euro dollar. So let me grab the chart here. Euro dollar, euro dollar, euro dollar. Where is euro dollar? Here. Okay, so if we look at the 4 hour, we are indeed at. Oh, I have a good news for you guys. I'll show you later. Yeah, let me note it down, otherwise I will forget. So we have euro dollar on a consolidation, right? So basically what just happened last week, I've explained it for you guys, and I think everyone here that was on the time, I say like, oh, that's a good point, I will be looking to sell. My personal take, that was, like, oh, maybe I'm going to have a short on my portfolio on euro dollar. Indeed, I do still have a short on euro dollar somewhere around here. I didn't catch on here because I've took the GBP USD short on here. But still, we are in a range where I like to short these positions, this trade, right? The only thing that maybe tilted the risk to the upside for euro dollar is if the FOMC press conference not today, Thursday comes, and the Fed and Jerome Powell says that they may be looking to reach the peak or something like that on those lines. That would be a problem. That would be a very big problem for euro dollar shorts. And then we may be triggering longs on euro dollar, but I don't think it will happen. The probability of this is very low. I would say like 20, around 15 to 20%. I guess he will be more neutral to hawkish on his speech after the decision of the rates. But everything can happen, but he won't disappoint us. I know him. He's my old friend. Sometimes he borrows my helicopter, so that's fine. Anyways, but here is the case. With euro dollar, I've got some good news for you guys. Let me just grab it quick. Otherwise, HSBC. What's happened? Oh, there you go. Just a moment. Okay, coming back. So I've seen a very nice report from HSBC last week where they are starting a short position on euro dollar, right? So if we have a look on here, here we open a trade idea to sell euro dollar at 1576, targeting 122 and a stop at 174. So let's have a look at the trade. 157.6, 157.6. 76, right? So I do have another position here as well. I have a position somewhere here and another position here. And then they're targeting 122.2, 1.222. Right, and the stop is 17 somewhere here. But I do believe that we may reverse all of these ranging, bound, all of these nonsense movements that is happening right now because of the, you know, lack of data from Europe. I guess we're gonna revert it and starting to go lower on euro dollar in November, right? That's my take. So the whole October we've basically accumulated, right? So it's not a big range. Most of the ranges are between 700 to 1,000. Yeah, so this one's a bit bigger than expected. So 170 pips. But I guess that we are, you know, rather going to the downside than the upside. And here is the report, right? And they still expected a higher euro and a lower euro, higher dollar and lower euro. If we look at the Telegram, if we look at the, Jesus, what's that? If we look at the yields, we are having, you know, a bit of uncertainty right now on the yields. Basically, that move that happened on this day here was because of Bill Altman coming to the media and expressing his view on the tweet, on the X, actually, it's not more Twitter, on the X, saying basically that he's shorting bonds right now because of the risk on the globe is too much. And that we had it, you know, like someone moved the market more than 16 basis points in 1 hour, in 4 hours. And of course, the euro dollar went up because a lower correlation, a lower dollar would make the euro strong. But right now, this is pretty much what we're having on euro dollar with my pen here. So we're having a very ranging scenario that we may expect to break those lows. Okay, if we break those lows, then definitely we could be looking to even further downsides. Well, not definitely, I can't say definitely. But anyways, you guys know what I mean. Now, yes, sir, about X, can you take a bit from your time and give us me a few people to follow there who influence the markets with their tweets? Yeah, I can do that. Wouldn't be a problem. What I can do is for us not waste, but like not, you know, waste time here. I can send it on the Telegram. Wouldn't be a problem. I can do that for you. All right, moving forward, guys. No, later. Yeah, I can do later. Now, what else we have I want to show you? Oh yeah, we're gonna have the GDP on Canada as well, but that's something that is happening on Canada right now. I guess we're gonna have lower growth. I guess my take on the CAD is much more tilted to the bearish side than on the bullish side that I was previously. I was like pretty bullish on the CAD, but then we had lower inflation, we had a pause, you know. Now we may have a lower growth, may have manufacturing is lower, so more going through switching my bullishness to bearish on the CAD. Not that they will exactly, the oil also not supporting much. If we look at the oil prices, you know, the WTI, the Western Texas Index oil prices, we are having quite, you know, like we had this old massive rally, but then it just lasted for a week or a week and a half. This is due because investors thought, yeah, I can share the link one more time. Investors thought that, you know, the war in Israel would escalate in certain points that, wow, it would be massive. Nothing happening right now, to be honest. Well, it is happening a war. We can't negotiate these, but come on, like, and what more? You know, this is it. Stop it there. You know, I thought, you know, if US comes in and helps Israel to fight against Hamas, or if Syria, you know, comes and helps even more Hamas, then we would have 4 countries, well, 3 technically, involved in one, conflict. I wouldn't call it this a war, but a conflict. Then it could escalate furthermore. Then we would have something very, very different right now, a very different scenario right now. I don't guess we will take this as I've just mentioned. I think we'll leave as it is. All right. So probably oil prices will retrace lower, somewhere 78, 80. And that, yeah, it will be there. Anyways, now we're gonna have a few things here. Let me check. Oh yeah, here the manufacturing PMIs and as well crude oil investors and the jobs. That's the job openings. Who does fly a drone and look at reserves of oil in some states in USA? I believe lately they were full, so basically not much demanded yet. Also, OPEC is easing. Are you talking about the guy that has a satellite, or I haven't heard this guy from a drone? You know the guy that has a hedge fund that has a satellite, right? Let me show you. What's his name? Damn it, forgot his name, man. He's a huge guy. He was like, oh yeah, I want to trade oil, but I don't know how can I trade it. So let me put a satellite and see the caps of those oils. If they're low or up, we can see how full or how full or empty they are. This is just crazy. This is what hedge funds do. They have money. These people are crazy. Yeah, man. Money is money. You can do whatever you want. Anyway, so pay attention on the manufacturing. I guess we may have, like here, the manufacturing ISM prices is expected to be higher. I believe that we may have a higher on here. And then we have, of course, the FOMC statement after the rates, the interest rates decision that is expected to pause. I do believe that there is going to have to pause. So if we look at the CMA Fed to watch, I don't know if you guys know about this one, but very nice tool. Let me send the link. So basically, this is a tool powered by the by the CMA group. So what they do is they go through surveys from big institutions around the globe and ask them what they think of the rate probabilities for the next meeting, and then they express these views for then they share these views on us. So basically we can see here that target rate probabilities for 1st of November Fed meeting is that the current target rate is 525, 550. It will be as current, so no changes. Only 1.7% believe on a cut. That's way too early, man. Way too early to the Fed do that. So let's go for the 98.3% of the market expecting a pause again, right? Even if you want, you can come and see the forward rate. So you can click on 13 December. Most of the market is, this 1.3% persists on here. But I'm more towards this 24.4%. I'm going to keep watching those numbers to see if those guys here, after the FOMC meeting here, so what we have is, we're going to have the rates decision, and then we're going to have the statement, but then 30 minutes later, we're going to have the press conference. When is this? This is Thursday, right? Yeah, Thursday. We're going to have the rates, the press conference. I would say watch out on this guy here, right? Because this, okay, it's sort of priced in the dollar. Now the market wants to see what will happen on here. This is more interesting than this. So maybe at 5 o'clock, the market will go up and down and stops at the same place of started the move. But pay attention when the Jerome Powell comes to the media and do the press conference, and pay attention as well to these numbers here, to those two numbers here. If they switch drastically, then that would be very good and will, make my analysis come true, as I'm expecting a pause in November because it's too early to the Fed do another hike. But then in December, I'm most likely tilted to a hike, right? So probably we may have a hike into 13th of December. That would be a very good gift for me, Jerome Powell, because my birthday is on 8th of December. So a few days after, I don't mind. Like, you can still give me this beautiful gift, a 25 base point hike with a hawkish stance. Would be beautiful, man. Anyways, and then we're gonna have Thursday the interest rate decision for the boy. They will pause again. And then initial jobless claims. Just be careful on this one as well, guys. And then Friday, it's first day of the month, first Friday of the month, we're gonna have non-farmer payroll. Right, so pay attention on those Thursdays, well, actually Wednesday, Thursday, and Friday, today as well. Just yesterday we didn't have much. So yeah, that would be all from the economic calendar. Let's have a look now onto these big boys here. So JP Morgan, what's JP saying? Let me close this. Let me close this as well. Let me see if someone ready. No one have been here. So, okay. I'm gonna send the link again just in case you guys haven't had it yet. Link. Telegram. There you go. Anyways, so here, right? So the outlook for Forex market weekly. Unfortunately, guys, I thought I would be able to share these reports with you guys, but because it's third party, I can't do it. What you guys can do, I can't influence you all to do this as well. I'm not influencing anybody to anything here, right? So please don't, right? Okay, so I'm not influencing anybody to do that. Again, what you can do is you can subscribe to this platform called Prime Market Terminal, where you can have access to those files. All right. Oh, okay. Thanks, Lutana. Let me update it. Oh, there you go, man. That's awesome. That's so good. Really good. Right. So yeah, this is the platform info, guys. Or you can go to EFX as well. This is not here. EFXdata.com. They're pretty good as well. This is all things that traders must have, right? It's like bank reports, is those types of things that will make you actually part of the market. Don't you have a discount code for PMT Luca? Because I have a 20% with me. Look, mate, you can share if you want. I don't have. I had to talk to Marcio. But yeah, I know they have those links if you want to share. I think PMT has a more affordable price. It's like $40 monthly. That's very cheap, to be honest. US dollar. Anyways, I can't tell much, guys. So this is it. Sort it out on your own. Now Forex Market Weekly. Talk to this purple guy here, the iPhone purple. He may be able to help you. Now, so the outlook for JP Morgan is that so the recent stall in US dollar looks at odds with widening cracks in risk markets, but can be simply explained by the relative stability of rate differentials. That's true. The ROW has essentially imported US monetary policy that is odds with much weaker domestic growth, which risks future currency weakness. We do not subscribe to structural explanations, such as erosion of reserve currency, erosions on fiscal unsustainability, grounds that some have advanced for the USD recent stability. So they're still pretty bullish on the US dollar, though. They don't want, you know, take these as a bearish move. So the macro trade recommendations is that you stay bearish on euro. You know, they've short euro dollar and euro Japanese yen in options. They short euro in carry structures versus, you know, Mexican pesos and Canadian dollars. They short euro proxies like the SEK and the pound, and the USD long versus USD, and they long Swiss franc versus pound, and long dollar versus Chinese yen. Now the Forex technicals means that the euro dollar consolidation is below 106 resistance layer. Medium term bears keep the agenda below key levels surrounding 108, right? So lower than between 106 to 108, they don't think it will much go above that. I don't think it will go to 108. That would be a very different approach. But anyways, so let me parity here. So what about if I click here? Can't. Damn it. Anyways, so they've mentioned somewhere that the bears on euro. Oh, maybe if I click here. No. Damn it. Anyways, so JP Morgan looks at euro dollar as most likely to hit parity, right? So that's it's a good trade as well. And they talk about USD Japanese won to the 155. Right, so we also expect upward revisions for to the inflation outlook for forward 2020, final year 2023 and final year 2024. Board likely will keep inflation forecast for FY25 unchanged to below 2%. They actually did it on the grounds and a few other things. But talking about the board now is that if we go to the session recaps, just wait to load here. I've just actually marked it down here. So we are very close to the 1% as the board, you know, want the yields to be. So the Bank of Japan October 31st statement, you know, it's here. We're going to read it out soon. But the last time the Bank of Japan allowed an expand range for the 10-year Japanese government bonds yield tolerance band, the bank explained this was to make ultra easy policy more sustainable. Today, the board set the 1% cap more firmly in place, cementing that reasoning. It looks like loose policy is set in place for still some time to come. So that means that it is very bearish for the Japanese yen for a quite time from now on. All right, so even if we read the monetary policy, I will send it out. I don't want to read all of this with you guys. This is tons of work to do. It's lots of little things. What I will do is I will, as always, you know, this is my work. I will read it out, everything, summarize, see the best parts, and send it out on the Telegram. So this is the benefits to be on the Telegram. I don't see any not benefits to being there. Like, you get actually every single thing on the top of the little tiny details. Anyways, so that's pretty much it from my side. Do you guys want me to analyze anything? This week will be plenty of volatility, guys. Plenty of volatility. Everyone asks me about gold. So let me go gold again. Where is gold? Gold here. Wow. Right. So we did have this massive up move on gold prices. You know, before someone sent you a message. Gold looks like it wants to go above the 2,000. Oh, definitely, it looks like he wants to go. Just as the war hits, you know, let's have a look on here. Gold has rise 8%, right? 8%. What does that mean for me is JP Morgan, I think it was JP Morgan, I can't remember now. Man, I read so much reports, I can't even stress myself to remember who said it. But anyway, some bank said it around around 200, 2100, right? 2100. Do I think it will hit? More the war escalates, more this conflict escalates, definitely we will have more people seeking safe havens. Right, I can say definitely because this is quite common knowledge, right? When something explodes, you want to whatever explodes, you want to be seeking safe havens like Swiss franc and gold. And this is, of course, primarily the reason, but as well as we are end of the year, and most of the times gold rise end of the year. I want to show you something very cool. Let me grab it here. On gold, the seasonality here. If it loads, okay. So the seasonality is, is due to go up. November, we may have a decline, 0.1%, somewhere around that. But in December, we may have a huge upward, this is seasonality. So basically, this is since 19, 20, 21, 22, we sum all of these numbers and then divided by 4, it gives us the average, 0.163, and then this we may be looking at a positive month or negative month. So have a look afterwards on Google. This is pretty nice seasonality for Forex or whatever. So pretty cool. I do believe that we can continue this upward move, even if those pressures escalate. Okay. Now you think like, oh, okay, but it's against US dollar, even with US dollar is strong. Yes, because gold is a commodity and it will change. It doesn't matter about the currency you're going through. It can be the pound on the best time. It doesn't matter. It will be stronger because it's a commodity. It's a safe haven. It's different. USD CAD, I was just eyeing here. I do believe we can still go higher on USD CAD, right? Because as I've mentioned, CAD is lowering, the economy is slowing down on Canada. So it may be able to, give the USD CAD this pull through movement to the upside, continue to go into the upside. What else? Yeah, that would be pretty much it. Now I want to show you last something here that if I can check this off. Oh, there we go. So I don't want to show everything because that's not going to be nice. So I can do this maybe. Yeah. Okay. So this is what I want to teach you guys to do on the next, after not in the next, but soon as we hit 100 subscribers on the Telegram channel. What I want to teach you is how to get this approach, with data, back to data decisions, and how we can actually, okay, if the manufacturing PMI or whatever PMI come lower, how can we expect the GDP to be? How can we expect the CPIs to be? So on and so on. Everything on the economy works correlated, right? The economy is a water of wheel. It's like a bicycle. You need to pedal to it works forward, right? So everything needs to be set in place so then it can work smoothly. So all the data that we collect, all the raw data that we collect, it is actually working. The yield is negative today. Does the dollar goes to 105.60 before the FOMC news? Most probably, yes. So, this is something I want to teach you guys. I really, really want to teach you. But Once we get the 100 subscribers, that would be my go. Let me have a look on yields here. So we have 0.5 at the 2 years, 0.5, and then 10 years, 116, and the 30 years. Oopsie. We are at 105. Yeah, DXY may go. Where is it? Here. So we are again consolidated on the DXY. We may go here 105 again. You know, seem like there are lots of nice influence here, so then it can move up again. Yeah. All right, guys, that's my take for today. If anyone have a question, please send me out now. No questions? Let me check this one. About the euro. Yep. Oh, yeah, about the euro. Well, let me check again. You mentioned about like why is it going up, right? It's primarily lately some up moves. Yes, yeah, I know. So primarily is because of the yields that it's ranging, right? All the correlation right now, it's going through here. So we had down move and then we had up move there. So if I put in 1 hour here and I go to add another, where is it here? And then add euro dollar, new price scale, we can pretty much see like yields go down, euro dollar go up. Yields go up, euro dollar go down. Now yields consolidate, euro dollar consolidate. Yields going down, euro dollar going up, right? So we must see these yields going up, so then we can see euro dollar going down. But recently, this is what it's not happening here, you know, and then going up a bit, going down here, going up here, and so on, so on. Euro dollar is more related to the 10 years. And if we think about, okay, why is the yields going down then? Primarily because of investors not knowing what will happen next, and then they are taking off those positions. And quite frankly, with you guys, I do think, thinking about bonds, what they primarily drive is most likely central banks and influences on the economy, like geopolitics, macroeconomics around the globe, and so on. So when we talk about yields, is if yields are higher, then people are even more afraid. If yields are going lower, then people are like, oh, that may be a good sense of the economy, maybe an equilibrium of the economy. So just finishing your question, we need to see a higher yields. We need to see the Fed, you know, coming this week to a sort of hawkish approach to have a lower euro dollar. Right? I think this is what will probably happen when we got like euro dollar. Where is it? Damn it, it was just here. Oh, here. So this is what probably will happen. Like we're gonna have a higher euro dollar somewhere around here, and then the Fed will comes and there it goes somewhere around here. Not because in one move, don't get me wrong, but like next week, you know, as October unfolds, then next week we may have starting to go down on euro dollar. But I'm still holding my positions. Like this is the thing, right? I'm not that crazy to, oh, okay, just a bit of a move, I'm gonna get off. No, set and forget. That's it. Relax. If all of your analyses are going well, right? Let me share you guys something here. Let me grab it just a moment. If I have it, I would be able to share to you. Just a second. No, not here. Sorry, just a moment. Like, let me find it. It's really worth the time. Just a second. I want you guys to take a screenshot of that. Oh, actually, I can send it to you on Telegram. Oh, here. Okay, let me send these to WhatsApp, and then I can show you guys. All right. Let me stop sharing my screen. Grab this image. So, just finishing your question again, no, those times when we think like, oh my God, it's going up, it's going against me. I want you to think about this image. Let me share my screen. I want you to think about this. Okay. So the trade is running. Should I close it? Has your fundamental reason changed? Or fundamental reason haven't changed yet because we still very bullish. Hey Lawrence, how you going, man? Is it profit taking? Yes, exactly. Oh my God, that's so much. I was I was off from the chat 1 second. We own 28 members now. Don't you have discount? Kindly, the yields is negative today about euro. Yeah, Luca, we need to have this call twice a week. Thanks very much, sir. Not a problem. Look at fear, greed, FOMO feelings. I know, man. I know how you feel. I've been to that. Sometimes I feel like that as well. Anyways, so pay attention here. Right. So should I close it? Right. First thing, has your fundamental reason changed? No, we haven't changed it yet. Okay. But if yes, is this change sustainable? If yes, close the trade. If no, evaluate to let it run, may set it to break even or reduce risk. Now, it haven't changed it. Are the headlines that changed your traded year? What headlines? That Europe is going really bad? No, right? Has the risk sentiment changed? What risk sentiment? No. Has the price reached your resistance area? Yes, it is on the resistance area, right? Has your fundamental region changed? No. Are the headlines changed your trade is? No. Has the risk sentiment changed? No. Keep the trading running. That's it. Okay. Everything needs to be systematic. I haven't showed you guys yet my trading system. I haven't showed you guys yet 1% of how I trade, because I do have a lot of limitations that I can't tell you come here because I'm not a financial advisor, and ACY is not a financial advisor, but there's so many things that I would love to tell you guys. Anyways, share the link, Telegram link again, please. Yes, I will share again in the end of the webinar about the euro. We've seen lately some up moves, yeah, blah, blah, blah. Luca, we need, speaking about bonds, what are the primary drivers? Yes, I've answered that. Don't you think that we are going to recession here and there in the future? Yeah, we may go. Is it fair to say that it's because of a weaker dollar rather than a stronger euro that is behind this rally in the euro? You are right, but you're not wrong. You in there, because the dollar is very strong and the euro is quite weak. But when the dollar gets weaker because of the yields, and then lower yields is lower US dollar, then it gives the euro time to shine for a bit. You know what I mean? What was the other question you sent? I think not yet because it's coming giving the data. Oh man, I forgot. Where's your question? Damn it. Anyways, yeah, that's all. You guys want it twice? Maybe. I'm gonna talk to a few dudes, and then let's see what they say. Maybe I can do it twice. Maybe. Who knows? Anyways, guys, anything else I can help you all? going. That's all, man. Thank you so much. You're welcome, bro. Not a problem. All right, let me send the link again for the Telegram. So Telegram link. Not a problem, everyone. Not a problem. Not a problem. You're all more than welcome. Lawrence, I missed you, man. Where were you, bro? Wilfredo, you're welcome, mate. Have everyone a lovely trading week. Thanks, Abbas. And I see you all in the YouTube channel and into next week webinar. All right, guys. See you.